Hi everybody, this is my second video on the topic of lease remeasurement under IFRS 16 or IND AS 116. In this video, I will be taking you through a solved example which is slightly more complicated than the example that we covered in my last video. But before we get to actually solving this question, let's do a quick recap on what exactly is the concept of lease remeasurement. So what is lease remeasurement? Lease remeasurement is a change in the lease liability on account of change in some specific assumptions. Now the assumptions that can be changed are divided under two heads. One is a change in the lease payment components and the other one is a change in the lease term. Under lease payment components, what can change? One, there could be a change in the assumption on the index or rate on which the variable payments are dependent on. Second, it could be a change in the residual value guarantees. And third, there could be a change in the nature of payment from variable payments to, in substance, fixed payments. Now, what are the assumptions that can change under lease term? Under lease term, the lessee may change his original stand with regard to the option to terminate the lease, extend the lease, or purchase the asset. Now, what is extremely important while solving a problem is to know what is the discounting factor that needs to be considered. Now, if a change in lease liability is entirely on account of a change in the lease payment components, you will consider the existing discount rate. But if there is a change in the lease term, then you need to consider the revised discount rate. Finally, the accounting entry that is passed. As you can see, it is a change in the lease liability. So one of the accounts that changes is the lease liability account. The second adjustment is to be made to the ROU assets account. If there is no balance in the ROU assets account, the amount is to be taken to the profit and loss account. Alright, so let's go into actually solving the example. Mr. X leases a machine for 5 years on 1st January 2020. He is required to pay an annual lease payment of 100,000. He has an option to extend the lease term by 3 years and the annual lease payment for the extended option is 110,000. However, he is reasonably certain not to exercise this option. The payment is expected to increase every 2 years based on the previous year's CPI. So the payment due on 1st Jan 2022 will be based on CPI of 2021. The CPI for 2020 was 123 and the CPI as of end 2021 is 125. He incurs an initial direct cost of 30,000 to secure the lease. The incremental borrowing rate as on 1st Jan 2020 was 5% per annum and in 2022 was 6% per annum. In quarter 1 of 2022, Mr. X enters into a 5-year supply contract with an MNC. As this is a very lucrative deal, he decides that he will take up the option of extension of lease term at the end of the original lease. Is Mr. X required to remeasure his lease liability? If yes, what is the accounting treatment? So first of all, let us see whether he needs to remeasure his lease liability or not. You need to remeasure your lease liability if there is a change in the lease liability on account of the specific changes in either lease payment components or the lease term. Mr. X is required to remeasure the lease liability as it is caused by a change in the index or rate, that is the CPI, and a change in his assessment on exercising the option to extend the lease term. Now the second part of the question, if yes, what is the accounting treatment? Now over here, you just need to give what will be the accounting entry that is to be passed to remeasure the lease. Everything else that I will be showing here are for your understanding and as a part of my working notes. Alright, let's quickly do a summary of the question. We know that there is a reassessment that happens in 2022. So we make two columns for information. The first one, we know that Mr. X leases the asset for 5 years, which is the original lease term, and he is required to pay annual lease payment during the original lease period is 100,000. There's an option to extend the lease term by 3 years. We know that he takes this up in 2022, and the lease payment during this for the 3 years is 110,000. 6,000. Then we also know that in 2022 there will be a change in payment because of a change in the CPI. In 2020, 123, 2022 is 125. There's an initial direct cost 30,000, and then the discounting factor during the original lease term is 5% and the extended period is 6%. In Q1 of 2022, Mr. X enters into a 5-year supply contract with an MNC. So this is the event that has resulted in a change in the assessment of the lease term. So now we start with actually solving the problem. The first working note is, you all are very familiar with it, we've done it before, and that is computation of lease liability. Now, because there is a reassessment of the lease term, I always add one more additional column, and that is the actual year. So here I will call it year in numbers. In this column, I put in the years. So we have 5 years from 2020 to 2020. Over here, payment is made at the beginning of the year. The number is 0. I have discussed this in detail in my video on computation of present value of cash flows. I have given the link here. If you are not familiar with how to calculate the present value of cash flows, please do watch my earlier video. All of these are lease payments. The cash flow during the original lease term is 100,000. The discounting factor during the original lease term will be considered at 5%. The formula, as we know, is 1 divided by 1 plus the discounting factor raised to the power of the number of years. The discounted cash flow is cash flow multiplied by the discounting. So 454,595 is our lease liability, but please remember, this 100,000 is paid on the date of commencement of lease itself. Now, for your understanding, I will pass the journal entries here. The first entry that needs to be passed, if you remember, is the initial direct cost of 30,000. This initial direct cost gets transferred to the ROU assets account. Next thing we do is record the entry relating to lease liability. ROU assets account debit, including the payment in the first year. We made a payment of 100,000 at the beginning of the year, and so our lease liability 354,595. Let's go on to working note 2. This is the computation of closing balance of lease liability. Now please remember that unlike the earlier times we've calculated, there is a reassessment that happens in 2022. So you do not need to calculate closing balance right up to the end of the original lease term. The first year is 2020. The opening balance on the date of commencement is 454,595. We paid a cash flow of 100,000. The interest is opening balance minus repayment multiplied by 5%. The closing balance is opening balance minus repayment plus interest. In 2021, closing balance of the last year is the opening balance. We make a similar repayment. The interest is calculated the same way, and balance of 285,941. Working note 3, the computation of ROU assets balance. The opening balance that is recorded on the date of commencement is the initial direct cost plus the value of lease liability. So in the year 2020, the depreciation is the closing balance divided by 5. In 2021 also we have the same amount. Okay, so now the new part starts. We are in 2022. In 2022, two things have changed. One is the CPI index has changed, like we discussed in the simple example earlier, but there has also been a change in the lease term. So this is why this example is slightly more complicated, because two changes have come together. in 2022, we need to reassess the lease liability. So that is what our working note 4 is going to be, computation of lease liability in 2022. So here we see that there is a change in lease payment component as well as lease term. So which discounting rate factor will you consider? The original one or will you consider the new one? So when the two changes come together, you need to focus on whether there has been any change in lease term at all. If there is a change in the lease term, then you need to use the revised discounting factor. So over here, the discounting factor will be 6%. Alright, let's start. The year is 2022. 22 to 24 is the original lease term, and then we have the revised lease term from 25 to 27. Repayment is done at the beginning of the year, so 2022 is 0. They are all lease payments. Now the cash flow is affected by the change in the CPI index. We know that the CPI index in 2022 is 125 divided by the CPI index in 2020, 123. So we get a cash flow of 101,626. This cash flow will continue till 2024, which is the original lease term. Now in the revised lease term, the cash flow is not 100,000 but it is 110,000. Same change in CPI index applies to the extended lease term as well. The discounting factor 1 divided by 1 plus the new rate raised to the number of years, and then the revised lease liability is 553,888. Now we compare this lease liability with the lease liability as at the beginning of 2022. So the remeasurement required is the revised lease liability minus the lease liability at the end of 2021, 267,947. So that is the entry that you will pass on 1st Jan 2022. ROU asset debit from here to lease liability, because at the same time on the same date lease liability account debit to bank an amount of the first lease payment in 2022. So that is the end of the solution. Now for your understanding, let us also look at how we will compute the closing balance of the lease liability and the ROU asset after lease remeasurement. This is purely for your understanding. You do not need to give this part in your exams. Computation of closing balances of lease liability in 2022. The opening balance is closing balance plus the difference in the lease liability. There is a repayment in the first year itself, and our interest is opening balance minus repayment multiplied by 6% this time. Closing balance is opening balance minus repayment plus in 2023 the closing balance of last year becomes the opening balance. One, like I've said before, one way of checking the arithmetical accuracy of your solution is realizing that the lease liability will be 0 at the end of the lease term. We also do one more, last one. It is a computation of closing balance of ROU asset post remeasurement. So what is the balance on which the depreciation is to be calculated? We have the balance of ROU asset as of end 2021, the addition we can get from our journal entry. So this is now the balance of ROU asset. This needs to be depreciated over a period of 6 years. The closing balance is the opening balance minus depreciation for the year. The asset has been entirely written off by the end of the lease term. That brings us to the end of this video. As always, please share any queries that you may have, any thoughts, comments, suggestions for improvements with me. In my next video, I will be taking up the topic of lease modification. I really hope you found this video helpful. See you in the next video. Thanks. Bye.